Woke up this morning to a big red Bitcoin candle, and I'm not going to lie, I'm kind of happy to see it. Good morning, guys. It's Keith Allen, and if you are surprised by this move, quite frankly, you haven't been paying attention. I've been telling you for weeks, probably even months, that a bigger correction is on the way. Don't know that this is the big one yet, but nonetheless, as we approach the halving, we certainly are anticipating a bigger correction, and this is really kind of the start of it. That started with, we formed this cup and handle that took us up to the all-time high. We went up and retested that all-time high again. We had a little 14.5% pullback here. We retested the high, the all-time high, broke through, but wicked back down each and every day with the exception of one day, which gave us a big, giant red trend precognition down signal. And that has had confluence between the A2 plus algo up here and the A1 algo down here. And we now have another red downtrend signal happening here. This one tentative until the candle closed, but quite frankly, this is already validated in my opinion. It would invalidate if we broke that all-time high of 69K again, the prior all-time high, I should say. So those are things to keep in mind. But really, what the question is this going to be enough? Is this the entire flush at this point? So, if you're one of those people that doesn't believe that we could have, really a bigger correction leading up this close to the halving, I've got news for you. And if you've been watching these analysis, you've seen it. But if you're new to my analysis, I will show you again. Or I will show you for the first time, and the others will sit through it, right? But we've got a history of deep corrections leading up to the halving, and also corrections happening right after the halving. Look at this, 30% just before, and followed by another 30% just after. It can happen. Don't believe the hype. Don't buy into the up-only hype, not even in the ETF era, because yesterday was a prime example of that, right? Those ETF flows have been changing just a bit. And this one, a huge one here, right at the first approach to all-time high here. This is where distribution began, 56% dump, and then a distribution rally to the all-time high of 69K. Speaking of those ETF flows, yesterday, a big day for BlackRock, 450 million in inflows, but that was completely offset by 640 million in outflows from Grayscale. So it was a net negative day for those ETFs yesterday. And that's only happened really a few times since that initial flush from Grayscale right out of the gates, right? So it can and it will happen, and it will continue to happen. So, the fact that up only isn't a thing, I like this validation that even in the ETF era, up only is not a thing, right? So let's go back to the chart here and look at where price could possibly land, right? At the moment, we bounced from this 62.5 level. 62.4 was the low of the day, okay, so far. And we have an FOMC announcement coming up tomorrow. I don't think anybody anticipates the Fed to start cutting rates yet. However, Chairman Powell has telegraphed many, many times in the past that they anticipate cutting to start later this year. For a total of 75 basis points. That would be a series of 25 basis point cuts, right? 0.25%. And, at this point, we've seen some inflation data that's come in a little bit hotter. They're obviously data dependent, and we've seen some data that's come in a little bit hotter here in the past couple of weeks that could be giving the FOMC, could be giving the Federal Reserve reason to reconsider. So we'll be listening tomorrow to Chairman Powell's announcements to see if he telegraphs, similarly to the way that he did when he testified before Congress a few weeks ago, which was, kind of dovish, thinking that this could continue to, that we could see that inflation was trending in the right direction and that we could see cuts happening this year. And they did also warn us that it would be a bumpy ride down. So we're seeing that bumpy ride down now in terms of the inflation numbers. Now we have to see if they are still telegraphing kind of that dovish sentiment that we could start cutting as soon as Q3, right? So, or Q2, I should say, right? We're still wrapping up the first quarter here. So potentially in the second quarter, if not the third. I certainly expect to see some cutting happen before election time. So let's try and get a bearing on where price could go. Lots of discussion about a 20, 30, 40% correction, which has yet to materialize still, right? So we would look to areas of prior consolidation to be potential landing zones, and of course these technical indicators like the moving averages. The 21-day doesn't really do it for me. I'd be really excited if it was, and 15% doesn't really do it for me. I'd be really excited if that was a flush to the 21-week moving average, which would get us down here into that range of prior consolidation of that 44, 45K range. Let me clear some things out here and make this a little bit easier to decipher here, okay? I know I got a lot of lines on charts, but they all kind of represent something important that I'm going to discuss with you here, right? So, we had some prior consolidation, not much this time at this 58 to 60K level, but we did have it historically as our approach to the prior all-time high. So there's some confluence there that could conceivably hold. And at the moment, we see some, liquidity stacking here above 60K. But man, it looks like some starting to thin out. So I'm going to drill into this. But first, I want to show you this red cohort. They've been accumulating very aggressively since Christmas, over 3 billion, about 3.5 billion since that time. But they are now selling into this downturn, right? They're selling up. Look at this. 60K just got rugged. This was here literally before I started this analysis. So this is significant. Now, did it turn into a market order? Doesn't look that way. Let's drill it down. Ooh, all right. This is a big deal. So this is either rugged because there's no sentiment for it to go lower, or it's rugged because it just opened the door for a bigger downside move. And guess what? I'm betting that we could conceivably go lower after this, right? Gosh, all this volume and volatility, even TradingView is having some problems catching up to it. This could open the door for this opportunity. So I said the 21-week moving average, that gets us at the moment, these averages move every day. That gets us at the moment right into that 36, 37 range. We see a lot of overshoots, so it could very conceivably go down into that level. That would be an absolute gift. Of course, the 50K range also would be kind of important here. That's more of a sentimental, in my opinion, more of a sentimental level than the 52K range. But either way, that would be, let's see, if it took us down to that 52, that'd be a 30% correction, and 40% takes us down into this 44, 45K level. So those are the downside targets I'm eyeballing. I'm not saying that price is going to go there, but I'm telling you that I am prepared for price to go there. And I have, sold some Bitcoin on the weekend to try and repurpose that and come back in at a better entry here. So that's what I'm looking at this point. None of this should be considered trading advice of any way, shape, or form. This is a risky market. Do your own research, manage your risk accordingly, but be prepared for a bigger flush. Okay, I think we'll see some volatility tomorrow, especially around the FOMC announcement, because at this point, as you can see, a lot of this liquidity has been cleared out. So there's room to run, but oh, look, 60K did it just come back? Did I just? Okay, so there's still a bit at 60K. That's about 23 million at this point, but the liquidity around it, above and below it, has been rugged. So, and how much from that level? Just a little bit from that level. That was 31 million before, and now it's at 23. So some of this entire ladder has been pulled. That is significant. Also worth noting that we're not really seeing the buy pressure sentiment come back in from these cohorts down here. So that's what I'm looking for. I want to see robust buying from purple, brown, red. Red will start before the others do. That's been the pattern as of lately. So I'll be watching for that. But really, you want to see purple, which in my opinion has been the dominant class for Bitcoin over the years. So that's what I'm looking at. Hope that gives you some insight of how to approach the market here as we enter a really critical period. The halving coming up in April. FOMC announcement tomorrow. I'm expecting it to be a spicy week. Or we already have a spicy week. I'm expecting that to continue, certainly through Chair Powell's comments tomorrow. Thanks again for the follows and the support and the comments. Keep the comments coming. I absolutely love them. And I take the time to respond to each and every one of them. I really appreciate the support you guys are showing me. If you enjoy the content, please smash all the buttons and help me grow this channel. We did a live stream yesterday with a trading pair, which was a lot of fun. Got some insight and shared some insight with you guys that would have prepared you for this. So if you missed it, check the feed and you can watch that one. And I have another live stream coming up here in a few hours today with my friends over at Carbon. So I will put those links in the channel before they start or right at the start, so you can join us. Of course, if you missed the live, you'll be able to catch the recording of it. That'll be in my feed as well. Have a great day, and man, I hope you're having a great day. I know this is hurting some people because of the downtrend. I hope you didn't get wrecked. I hope I have prepared you for this kind of volatility, because I've been telling you it's going to happen, and it's happening, and I don't think it's quite done yet. So be prepared for that. Have a great day, my friends, and as always, trade safe.